It doesn't matter what's going on in the market. People are always looking to talk about real estate and specifically prices. If they're going up, it's like, I can't believe how high they're going. And if they're trending down, they're like, oh, they're going to fall further. So watch out. So it's always about prices. So we want to talk about that today. But more specifically, it's about kind of what the impact of these prices are and what's really behind them. So here's what I mean. Like, this is the home ownership rate. This is from Mike Moffat, then the home ownership rate by age cohort in Canada. Look at this. The younger people, the younger generations in Canada, the home ownership rate is just declining. And it's because of affordability. They're not able to afford things. They're not able to afford shelter. This is a problem in our economy for a number of different reasons. And here's why it's happening. There's a term that that JP Morgan came out and said, hey, there's something going on. This was a couple of weeks ago. They said, there's this thing going on. We're going to call it the debasement trade. And what the debasement trade means is they're creating more and more dollars. So they're debasing the currency. So people are trading or investing accordingly. And here's how this looks. This is from Luke Groman. Here's how this looks in different asset classes. You can see in US dollar terms, the NDX, which is the NASDAQ, is up 165% since COVID. S&P is up 102%. House prices are up 56%. Sounds great, right? Except that's in US dollar terms. If you look at it in other terms, well, in gold, the NDX is only up 7%. The SPX and real estate prices are actually down in gold terms. And in Bitcoin, well, everything's getting crushed, right? So this is the debasement trade. They're debasing the currency. So there's more of these units pushing asset prices up. That's what they're talking about. So we went through our notes, and this is something that we started speaking about in 2012. The next three slides are actually slides from a presentation we did in 2012 when we started talking about gold, and the real estate investors in the room were like, guys, are you crazy? Why are you talking about gold? You sound like an old man talking about gold. But we were talking about the debasement trade before it had this term, because we looked at the trends and we saw the US debt started growing at a pace like this. This was from 2012 when the US debt was almost $16 billion and now, $16 trillion. And it seemed outrageous that it was going to keep growing at this pace because it was growing so fast that we mapped it out. And we said, hey, look, it took 286 days for it to go to 15 trillion to $16 trillion. And then if we map it out at the same pace, by 2015, it's going to be at $20 trillion, which seemed outrageous at the time. And it did not hit 20 trillion by 2015. It took all the way to 2017 for it to hit 20 trillion. And now it's pushing in the high 30 trillion. I think it's 36 or 38 trillion. I've lost count. It's going crazy, but that is what the debasement trade is. So it looks like this in different asset classes. These are US asset classes or global asset classes. And specifically when you price it in Canadian dollars, here's different asset classes priced in Canadian dollars. Gold, silver, and Bitcoin. Same trends are happening. Same debasement is happening. So, and it's not just happening locally in like the country level or the individual investor. You can see what's happening now is it's countries are looking to go back into the gold trade. So gold is about to surpass US treasuries as the main reserve asset in the world for the first time in 30 years. So this is what happened for a period of time. Central banks were getting out of gold. They're like, oh, we'll just hold these US treasury things. They're just as good. But what they realize is, well, the US is creating more and more debt and more dollars and issuing more and more treasuries, the value and the demand for those things goes down. So now people are looking around saying, hey, maybe I don't want the treasuries. I want the gold. Again, the debasement trade. So that's what's pushing asset prices. Here's how this impacts real estate. Okay, specifically in Canada. Well, it impacts it everywhere. We're talking about Canada specifically. This top of this chart here, this is from wawa.ca. It's the median after-tax annual income of Canadians. You can see it's trended up. Amazing. Everyone's making more income. Incomes have gone up. This is a good thing in Canada. Here's the problem. They haven't gone up at the same pace as other assets. If we took the after-tax income and you measured it in the grams of gold that it can buy, incomes have gone down. The purchasing power has gone down. If you do it and you measure it as a percent of the typical home that it can buy less home as well. So although the dollar amount of incomes have gone up, the purchasing power has gone down. And that's because we've inflated our currency, debased our currency, and that inflation has gone to asset prices, pushing those up. And more of those has gone to asset prices instead of incomes. And here's what I mean. Here's the average Toronto Real Estate Board sale price against the M2 growth in Canada. So that's the money supply. And you can see, although they're at different scales, the trends line up very similarly. Makes you wonder, right? And if you go back here, this is the Toronto Real Estate Board price mapped against Canadian incomes. You can see that the asset prices are being pushed up while the incomes are barely budging. And this white area in the middle between the two lines, that's what we call the destruction of the middle class. Because of this debasement trade, asset owners have finished ahead. People who don't own assets are falling further and further behind. And that is happening right here in Canada. And it's an ongoing problem. So when we look at a trend like this, like, hey, what's happening with home ownership rates in Canada, this is why. Because we're debasing our currency and we're pushing asset prices up, and it's not going to incomes. So affordability gets harder and harder unless people can afford them. And it's what causes a number of different vibrations and kind of gyrations through the economy into other areas. So this is very important for investors to understand. That's really what's going on with house prices. It doesn't matter up or down in the short term. Personally, for us as investors, we like to take a long-term picture on all this stuff, because these long-term trends, this type of trend, this debasement trend, this is far more powerful, far more impactful, far more important than any short-term trend when we're making our investing decisions. So this is how we look at this stuff. The debasement trade's been around for a long, long time. Finally, more people are talking about it. So that's great. Maybe it will actually lead to some action and lead to some responsible financial decisions, and that, that we can make it at a larger scale so that we can really make an impact here at home and kind of make a difference. That remains to be seen. I mean, I'm not holding my breath on that one. Anyways, that's how we're looking at the market right now. For anyone investing in anything, I think it's really important just to kind of take that into account. So hopefully this made you think, gave you something to think about, or something maybe you didn't know, something you realized from there.